Welcome to the Me the Money Show. I'm Dan Barnes, Editorial Director at Markets Media Europe. And joining me today is John D'Antona, Editor of Traders Magazine and website. John, welcome to the Me the Money Show.
Thank you, Dan. Good to be here once again.
So tell me, are we starting to see signs of normalcy returning to Wall Street at the moment?
We actually are, Dan. It's been an interesting 2 weeks since I last talked to you. One of the things that's cropped up that's of extreme interest is a potential sale of Darkcool Liquidnet. They had been rumored to have been up and down for sale, but last week a story came out that they are exploring options. They've hired an advisor, and it looks like they want to proceed.
That's really exciting. So Liquidnet Specialist block trading platform used to be buy-side only, now it's got some sell-side participation. In the recent market volatility, I'm guessing trading platforms, and we know Liquidnet would have seen increased activity. So they're probably in a good position for a sale right now.
They absolutely are. Prior to March, there was that January little bit of a rally in the alley kind of effect, but things have gotten quiet. Then in come March, when COVID starts to really explode, volatility, as you know, went through the roof. It reached over 86, if I remember correctly. And everyone across Wall Street, Liquidnet included, saw trading revenue, go through the roof. And when you're looking to sell yourself, obviously, nothing wrong with a little extra cash on the bottom line to propel your value, which is where they want to be. Their ask is around $1 billion. And according to my sources, they can get that.
Well, I'm not too surprised. So Liquidnet's been quite acquisitive in recent years, and about 5 years ago, they added fixed income to their markets as well as their equity offering. So they bought Research Exchange last year. They've had a couple of technology acquisitions. They've actually expanded both organically and through M&A themselves quite well to fill out.
That's correct. They have made themselves more appealing, as if they weren't already pretty appealing. Their technology was always good. Their staff was always top notch. There was never any question about that. But the fact is, now that they've expanded their asset class offerings, it really makes themselves even more attractive. And given that the buy side is so into technology and there has been acquisition of other fintech firms, this could really bode well. According to some of my sources, firms like State Street, BlackRock, CBOE, Virtu have all been talked as being potential suitors that could very well bring the Liquidnet model of business into their fray.
That's really interesting. So let's just take those one at a time. You've got a big sell-side firm, big custody business. It's got a trading platform, Charles River, which is looking to make a front-to-back offering, much like BlackRock's Aladdin offering. Then you've got BlackRock itself, large buy-side firm, big ETF business, not a trading venue, but it has partnered with market access in the past, certainly on the fixed income side. And Virtu's been very acquisitive in itself. It, of course, bought ITG, the agency broker. So there's a lot of those firms have very different, but certainly interesting models that they could potentially fit a block trading platform into.
Absolutely. The block trade is not dead, as we like to say here, especially amongst our more senior fellows in the industry. They can really carve out a lucrative niche for wherever their suitor, their potential purchaser would be. And like I said, their technology offering, their name, still very high. They have great brand recognition, and that will carry them through.
That's great. John, thank you very much. And I heard that we've also seen some normalcy coming down on the sell side too. One of the brokers is moving back into town.
That's correct. This morning on Traders Magazine, we had reported that Triad Securities, which is an agency-only brokerage, they have announced a timetable actually to come back to their Manhattan offices. And what is unique is that they are located in the heart of the financial district of Manhattan, 111 Broadway. They're just a couple of blocks away from the New York Stock Exchange. And as we know, they opened recently with a lot of social distancing guidelines. I had an opportunity to speak with the chairman of Triad, Kevin Schultz, and he told me that they've already sent in an advanced IT team. and then their goal is to bring in people 2 to 3 days a week in a rotation schedule, so everybody can come in and just get a little bit back of the camaraderie, get comfortable being in the city. As everyone knows, New York City was the pandemic capital for the United States, so it's a challenge for them.
Absolutely. So, I mean, do you think that people are going to feel comfortable going back? There was some toing and froing with Bank of America, for example, some of their traders complaining that they were still in the office when everybody else had gone home. Is this the first step to more firms moving in, do you think?
It's a good first step, but I still know that some people I had spoken to, including those within Triad, they're a little nervous about going back. I mean, you have desks now that are going to be 6 feet apart. You have larger desks to even continue that space buffer. Even if you wash your hands, there's going to be no food in their kitchen that'll be closed. There's going to be some effort needed on behalf of management to get people to come in. I know that, like the New York Stock Exchange, Triad doesn't want their employees taking public transportation. So what they've decided to do is they're going to pay for parking for their staff, private parking, which in New York is quite expensive.
So that's very interesting. I like the idea that instead of offices disappearing completely, people are actually going to need bigger offices as you have 6 feet between every single desk. Quite reverse of what we've been hearing so far.
That's correct. What the goal is to get people comfortable just with the notion of coming back. I
Yeah,
mean, Kevin Schultz said to me, get people to come in the office 1 or 2 days a week just to interact, get used to the flow again of being with people. He did not say anyone was going to be compelled or forced to come back to the city. People
sure.
had to be comfortable coming in. And that was a personal decision that each employee had to make, which I think speaks to the fact that remote working and working from home, which on Wall Street was once considered never happened, has graduated past now a remote possibility, no pun intended there. But it's going to be more of the new norm, working from home, working in the office part time.
That's great. John, thanks very much. That's a fantastic insight into how things are changing on Wall Street right now.
You're welcome, Dan. Thank you so much for having us again. And as we say here at Traders, stay safe and stay healthy.